but your spending power is going to be limited. So, there's two toggles, right? There's one is what does things cost and what can you afford? And I think you're going to keep the what things cost levels up, and what you can afford is going to be suppressed. And I think that's what's going to happen. And the Fed's is going to keep adding to their balance sheet. The governments are going to keep spending, but people's ability to buy things that aren't of essential quality is going to disappear.
We no longer have a stock market anymore. Instead, we now have a market of stocks. And this stock market is following the central bank's money printing, and you simply can't blindly buy anymore because there are new rules to follow. But always remember, there is a bull market somewhere, and Trade Genius is here to help you find it. Put options, call options, crypto. Their proprietary algorithms are tuned to find the most profitable winners and losers to help you maximize profit. And if you've never traded before and want to learn, you can take advantage of the market when it goes up and down, exactly like these times we're experiencing. Sign up for one of many Trade Genius online educational courses. Discover the lucrative world of trading. Receive personal coaching from Bob Kudla and Philip Cleaver of Trade Genius. And right now, during the beginning of May, you can save over 50% off their bundled monthly specials, or use the promo code MAY for a whopping 45% off all non-bundled items. TradeGeniusAcademy.com. The link's in the description box below. And on with the interview. Good afternoon, everyone. Today with me, Bob Kudla, TradeGeniusAcademy.com. We've talked about gold, crypto, stocks, trading, and the whole landscape of what's been happening since the COVID, as well as this lead up into the monetary fiasco that we've seen that led into now the virus being blamed for the collapse, even though it was a lot of bad monetary fiscal policy that's really collapsing everything. But even during these times when markets are up, down, there's a tremendous opportunity. And Bob's here today to take us through a little bit more about, what's out on the landscape at the moment, because wherever you look, it seems like a shotgun spattering of info. It's hard to connect it all. We have the Bitcoin halving, and that's kind of the main news moving forward, because it seems like a lot of money might, as we've seen every halving, there's an enormous amount of money flows back into that. And, maybe we can get a clue on what the future holds for us. So Bob, thanks for joining. Floor's yours. And we're going to share some charts today, so you can kind of look along, follow along, and then see, visually what we're talking about with words. We're going to put it into some pictures here in the charts. So, Bob, floor's yours.
Yeah, hey, thanks, Dave. Yeah, so, first of all, the big news is that, so the halving occurred today, and then now basically the cost of mining has gone up to about $14,000 US. So it's going to be a little bit more expensive, and I think it's going to start driving the price higher. And we had a nice move up into the weekend, probably some profit taken ahead of the news. And, we think now maybe I don't want to call it parabolic move. We're not the Lambo guys here, but with the banking system, in basically disarray around the world, and central banks around the world printing to stay in power, these alternate currencies like gold and silver and other precious metals and Bitcoin and some of the other coins are going to do pretty well. And I thought maybe real quick I get to show you Bitcoin, and at the same time, we always kind of talk, kind of superfluously about our system. I can just show people actually what it looks like real quick too. So I'm going to share, and I'm going to jump back and forth so we don't bore people with a school lesson here. But okay, let me share.
Yeah, the money maker, pretty easy to follow. Again, I follow these trades as well, and it's a matter of just understanding, is it a triangle or is it a square, and what color it is, and that'll give you your signal, whether it's at the very bottom or trending toward the bottom, or at the top where you might want to exit your position. So take a look right. Yeah, there we go. Got circles, squares, and triangles. If you can read that, you're in the money.
Yeah, and you can actually, these are all customizable. And the first thing that we do is actually, when you become a member, is you get access to the 12 lessons, basically starting from, what is a chart to actually how to trade this stuff. And what's really cool is that we created an additional, kind of fail safe for us, where you see down here, this circle here, it's basically called our Uber buy signal. And it ties into what we call our profit ribbon system. So when this thing crossed up here, we got this buy here, and this move here, this chart's telling you that the move is overextended. So when this crossed and we got these buy signals, this was a buy right at this candle right here on Bitcoin. And if you just ran it into the trade management that we do, that was a 37% move. You know, where do you make those kind of moves, right? And that was in 3 weeks. And then it consolidated down, and this is almost like an ABC pattern. And then boom, it did it again. And then right up here, we got our hey, you better sell this signal too. And it crossed back in. Our trade management said to get out in this candle here, and you'd have made another 35%. So right now we're sitting here with Bitcoin saying, okay, we're in kind of consolidation mode right now. This green line here is kind of a bull bear line, like a long-term bull bear line. So if we get a buy signal above this, David, then we're looking for some really nice action with Bitcoin. So that's the Bitcoin chart. Pretty excited about it. I mean, here alone, you'd have made 70%. The world's falling apart. Bitcoin's up 70%. Don't let anybody tell you you can't make money trading these crypto coins. And we have a trading room that does nothing but trade cryptos and nothing but signals. And you get those, I believe. You get the crypto signals from us. We trade the main coins and we trade some of the alts as well. And the room does fantastic. So if you're into crypto, you know, you can just take advantage of one of the specials and you can start making money from day one. So that's crypto. Let me jump out of share screen here now. And
you know, there's a little bit of play in the market there. You have DuByne jumping 350%. And it seems that some of the altcoins or things that can be used for payment medium have been jumping around quite a bit as well.
Yeah, we follow at least 30 coins. So, and you get in a room and you can just ask. We have somebody in the trading room all the time. Say, hey, what about this altcoin? What about that altcoin? And we'll give you our perspective. But the most important thing to do will just teach you how to use the system, and you can trade any of them you want.
Yeah, and moving forward too, you know, if you take a look just back through history, I don't know if you have that chart there, but going back when Bitcoin was first 10 cents, and then it had the first halving and the second halving and the third halving. You know, what happens at each of the halvings in terms of, you know, you mentioned it's $14,000 now. Can you explain what you mean by $14,000 with the miner fee and then the reward after that versus the input of electricity and computational power, you know, versus the reward out, you know, even just last week compared to next week, you know, there's a huge difference in that.
Right. So it's costing them more to do the work, and they're going to, you know, the hash rates are going to come down, and it's going to be, you know, more expensive to do some of this work. And the cost is going to have to come up, or there are going to be a lot of miners that aren't going to mine, and you're going to get some, you know, supply and demand balance, and price will move higher. That's the beauty of halvings. And so, I mean, some of the crazier moves are like, hey, $125,000 to $250,000 on Bitcoin, which would be amazing. I think we'll see those in the other currencies before we see it in the dollar, because the dollar is going to be the one-eyed giant in the land of the blind.
Yeah, I certainly agree. It seems that across the landscape, as other fiats are doing less productively well than the dollar is, there's going to be a lot of inflows where people are trying to save themselves by jumping into something more stable. Seems like if you can jump out of one lifeboat into another lifeboat and without getting too wet, you know, before you grab the gunnels and come on back in, it seems that's where we're going, right? Like the U.S. dollar is the last lifeboat out there.
Well, yeah, it's going to be pretty scary. It's that, you know, I don't think the euro is going to make it, Dave. And with the yuan, I mean, how much money these guys are and debt they're producing. You know, in Japan, you know, Japan and China are in the 200-300% of GDP range on their debt. That's my system giving signals, in case you're wondering. You know, they're running out of room before their currency basically become worthless. And if the Chinese currency starts to devalue, it's very negative on our markets. Right now, there's a dollar shortage. You know, a lot of people are looking for an imminent collapse of the dollar. Don't believe them. There's a dollar shortage out there. And that's why you're wondering, why is the Fed and our Treasury trying to print all these dollars and get all this debt? They're trying to forestall a deflationary collapse. Now, at some point, the seesaw is going to toggle the other way, but it's not in the near term. So they're going to keep spending, Dave. You know, I wouldn't be surprised when we get to the next 12 months, we're looking at probably maybe a 16 to 20 trillion dollar, you know, Fed asset hold, which is incomprehensible. But we'll approach 100% of GDP, during this. I don't want to call it like a Great Depression, because the United States is in a different place than it was in 1929. It'll be more like an inflationary kind of depression, where asset prices and everything else will look like it's normal, but your spending power is going to be limited. So there's two toggles, right? There's one is, what does things cost, and what can you afford? And I think you're going to keep the what things cost levels up, and what you can afford is going to be suppressed. And I think that's what's going to happen. And the Fed's is going to keep adding to their balance sheet. The governments are going to keep spending, but people's ability to buy things that aren't of essential quality is going to disappear. And if the Grand Solar Minimum continues to do like what we're seeing now in Western Europe and in Northeastern United States, we're getting a taste of it now with some of the coronavirus stuff. It's going to become unaffordable. It's going to be really, really interesting times coming up. And then that'll blow the whole thing off, because they're going to try to shove money into people's hands. And then, the cost of food is just going to become the thing that's going to break the Federal Reserve back.
Yeah, because that's startling when you say, 12 trillion on the balance sheet going up to 16 to 20. And then, myself going in shopping the other day, just an enormous amount of items were up 25% over the last week or two that had gone in there, especially yogurts, milks, meats, if they're available. But that's a 25% increase. And, you're talking about the Eurozone not being able to hold it together. I don't even know what a picture of that might look like, and during the breakup, how would countries come back, and would they start to issue their own currencies again? How would they do that with their own individual? Would we roll back the clock 30, 40 years back into when every country had their own issuance over there? And when you traveled, you crossed the border in Italy, you had to get the lira. Went over to France, you had to get the franc, and you're 5 minutes away from where you stayed in the last village or town. I really can't visualize that landscape of a breakup.
It's going to happen, and people they're not going to be able to have the things that they had before. I mean, you're going to see the United States, we had what they call basically the latitude, grocery shopping, right? Out here from California to Chile, you can get asparagus any time of the year, or raspberries any time of the year, because all it did was move from Washington State all the way down to southern Chile and then back again. And now, we started getting these rifts in the currencies, is that, people aren't going to be able to import or export outside the season. So we're going to get back to seasonal foods again. So that's one thing that I think is going to be a big change. The other thing too is, what I call the non-essential services are going to go away too. Things that people just did, for frivolity are going to go away. And then you'll see a lot of what I would call the leisure travel overseas is going to go away too. So it's going to be really, it's going to be a big change for people. And I don't think people are prepared for it. I think people are still believing that, hey, things will get back to normal. I don't think it'll hit people for about a year from now.
Even less, especially when it comes to the travel. And they're talking about removing center seats out of the aircraft, which makes no sense to me. I mean, you're breathing the same air for 3 to 12, 14 hours. But they're talking about increasing the ticket fares 50% over what you pay. So on your last trip, if you got a pretty inexpensive flight to go somewhere, you can add at least 50% to it. Some other routes are going to be doubling in price. So it's going to bring airfares back to was 1950s, where, the wealthy or well-to-do classes traveled and the others did local drive and stay vacations versus flying to those other places. And that's when people would dress appropriately, top hat, suit, tie to get on the airplane. That's the kind of class that was flying at that time. So roll it back a little bit and you can see if your airfares double, triple, even if they quadruple, it would definitely put almost everybody out of, I guess, the leisure range. But then again, with all the coronavirus, would you want to stay in an Airbnb now? I mean, I know the paranoia is out there. Did they clean the place enough? Would you really want to get into an Uber? How about a regular taxi? Did they clean the seats enough? There's a lot of whole things moving forward. It's just going to be an entirely different world. And yeah, I agree. People are just definitely too complacent, thinking that it's just going to snap back into normal like a rubber band, and we're going to go back to the way it was 12 months ago. And I just personally don't. I think we're entering a whole new twisted way to do things, and we're going to have to evolve as everything around us resets, or I should say recoagulates. Maybe not evaporates, but recoagulates.
And that's what I was saying about inflationary depression. The prices are going to stay high, just less people are going to be able to afford it. You're going to get demand destruction, that way. So, yeah. So, and that's why you have to protect yourself. I don't want to be one of those people. I want to be able to afford those things if I can. And speaking of, I can throw gold up here real quick if you want to take a quick look, see where gold's
Would
sitting.
love to, because I'm a metals fan. And yes, you deserve for yourself to have these better things in life, to have the money to thrive and prosper during these times. I've been talking about the Grand Solar Minimum for how many years, and different ways and signs to look for it to get ready. So, Bob's here to tell you a little bit of ways that even though the market might be crashing in some places, there's always ups when there's down. There's always balance coming through. So if you're able to make money during this time and live, enjoy. You should. You deserve it.
David, it's funny because you and I always thought when we started, I think you started really ramping up Adapt 2030 when I started the Trade Genius part of my subscription service. And we always thought it was going to be the food prices that are going to do it. And we knew that viruses come from the colder weather. Just didn't think it was going to be a manufacturing crisis out of China. But now everything is going to be a follow-on to that. So here's gold. And so, again, here's our system. And it's just so easy. We take the guesswork out of trading. And so if you go here, we get this pull down. We go, okay, we got the cross up here. This is, again, too far, too fast. Signal, crossover. You'd have bought right here. And you would have stayed in the trade to here. And that's 11% on gold. That is a massive move for gold. And if we just go and I'll show you SAND is one of the gold financing companies. I trade this obviously on a lower level than a daily. But if you go down to hourly here, you can just see how just been banging out profit after profit after profit on this trade. Okay, 8%, 16%, 7%. 2.5%. I didn't take this last trade, but that was tradable too. And then now we're consolidating again. We're above the bull bear line. So as soon as we get another buy signal, we're going to chase this thing again. And here, right here, just 35% move in a month. The market, is struggling, and we just keep finding these winners. And it's not just that. Here's the one that I think we're going to be most interested in having drop in our lap here because it's been lagging is basically silver. Silver's been really struggling. We've not really done too many trades here. I've been staying away from it because I don't like the fact that it's still on a decline here. But this right here this is basically called crawling the trend line right here. And when this thing pops over it, Dave, it's kind of like liquid oxygen, right, to a match. And we should see silver really pop from here. And so basically all the silver miners that people have been waiting for are really going to bust a move here. So, we're watching the AGs of the world and the PAS and Endeavor and Great Panther and all these are going to just start to really lift. And these moves here, once silver breaks out, you're looking at 100, 200, 300% moves on silver. So that's another one to watch. And so once silver breaks out here, Dave, the next sell buy signal we have, and we flashed one here, but I'm waiting for the slower ribbon to turn up to confirm for me because silver's been struggling, as you can see, and this thing's been capping it ever since we've been in February. It has not yet recovered like other things have recovered, but this is absolutely basically a rounding bottom here. And once it breaks over here, we should get a nice move. And we should be moving from 14 to 18 on SLB, which is about $17 silver. And then we can see what's going to happen. But that move right here, that's 30%. The miners should double on that move. And, what a great place to position yourself.
Yeah, what do you think about prices overall? Do you see gold going up to 35, somewhere around that, 3,500? Do you see silver trailing behind it, moving? Because the ratio of the amount of ounces of silver to buy 1 ounce of gold is completely skewed, around 110 ounces of silver to buy an ounce of gold. But through history, it's been 15, 20, 30, as approximately, at least 3 to 4 times the average over the last 5,000 years right now. It's strange how everything's kind of off on the conversion on that.
Yeah, just a lot of derivatives in that. Yeah, so that's what we started seeing that ratio start to break down. So right now, fair value for gold based on debt and things like that is around $25,000, and if the government wanted to wipe out debt with gold, it's $75,000. So that's kind of where we're sitting at the moment, and silver, that ratio should come back in. We've been crying wolf, all of us, on that silver ratio for a while. They really have it pinned down. And I'm not sure if it's because it's being classed more as an industrial metal, but silver has been in deficit, so it's being consumed. So at some point, there's going to be a aha moment. That happened with palladium and platinum.